It's decision day for Nigeria's Monetary Policy Committee as it will consider interest rates. The Bank of Singapore is granted a Category 4 license to operate in the Dubai International Financial Center. Plus, the IMF considers reports on misreporting by Mozambique government. Many thanks for joining us on today's edition of Business Incorporated. Welcome to the program. I am Bolaji Akinwale. Let's begin with the Central Bank of Nigeria's Monetary Policy Committee meeting, which is expected to decide on the direction of the monetary policy rate at the end of its two-day meeting today. Now, the closed-door session will see members review major developments in the global and domestic space with a view to forming relevant monetary policies that will be in place till January of 2017. Since the last NPC meeting in September, the global risk landscape and policy outlook have changed, underlined by shock waves in the global bonds market, risk on appetite in the U.S., and the underperformance of emerging markets assets. At the last meeting, the committee left all rates unchanged. In light of the current economic situation, analysts see that all rates will be held constant. And Channels Television will be bringing you live coverage of the announcement by the Central Bank Governor, Mr. Godwin Emefiele, by 2 p.m. local time. And Channels Business Editor, Wilson Mofai, will bring us live conversation from Abuja in the course of the program. In the meantime, the head of Nigeria's Statistics Office, Mr. Yemi Kale, says that the country would have to generate a positive 4% growth in the current year in order to stave off 3 consecutive sessions of negative growth. Speaking to Channels Television earlier on Tuesday, the Statistician General says that Nigeria has recorded an aggregate negative GDP of 1.5% so far, with third quarter a massive 2.24% in the negative. And that was announced yesterday. Let's listen.
Year to date, we're at minus 1.5.
On aggregate?
On aggregate, year to date, yes. And to avoid a negative growth for 2016, we would have to grow by at least 4.3% in the fourth quarter. That is excessively difficult, or some might say almost impossible, considering that we're already towards the end of November. And the numbers we are getting so far, things are getting better, but probably not as good as we expected, certainly not to get to 4%. So the outlook is more of things improving. But it's a very, I think even if we get out of recession in the fourth quarter, it will be more or less borderline. So I think it's on that margin.
The projections by the World Bank, IMF and co. was about 2% for the year. So with 1.5% aggregate so far, you think perhaps we're not likely to get worse than 2% on aggregate for the year? I would be very surprised if we get to 2%, a negative 2% for the year. I think all the factors ordinarily suggest that we should do better than that.
The Bank of Singapore today announced that it has been granted a Category 4 license to operate a branch in the Dubai International Financial Center. This allows a Bank of Singapore to offer a comprehensive range of customized private banking solutions, including investments, credits, and wealth planning advisory services to its ultra-rich, high net worth clients. The official opening of the branch is scheduled to take place in the first quarter of 2017. Approval to operate a branch in Dubai comes after an opportune time, at an opportune time as private wealth in the Middle East and Africa is projected to rise at a compounded annual rate of 8.2% to reach a record high of $11.8 trillion by 2020. And President-elect Donald Trump says the U.S. will quit the Trans-Pacific Partnership trade deal on his first day in the White House. He made the announcement in a video message outlining what he intends to do first when he takes office in January. The TPP trade deal was signed by 12 countries, which together cover 40% of the global economy. Mr. Trump also pledged to reduce job-killing restrictions on coal production and stop visa abuses.
I am going to issue our notification of intent to withdraw from the Trans-Pacific Partnership, a potential disaster for our country. Instead, we will negotiate fair bilateral trade deals that bring jobs and industry back onto American shores. On energy, I will cancel job-killing restrictions on the production of American energy, including shale energy and clean coal, creating many millions of high-paying jobs. That's what we want. That's what we've been waiting for. On regulation, I will formulate a rule which says that for every one new regulation, 2 old regulations must be eliminated. So important. On national security, I will ask the Department of Defense and the chairman of the Joint Chiefs of Staff to develop a comprehensive plan to protect America's vital infrastructure from cyber attacks and all other form of attacks. On immigration, I will direct the Department of Labor to investigate all abuses of visa programs that undercut the American worker. On ethics reform, as part of our plan to drain the swamp, we will impose a 5-year ban on executive officials becoming lobbyists after they leave the administration, and a lifetime ban on executive officials lobbying on behalf of a foreign government. These are just a few of the steps we will take to reform Washington and rebuild our middle class. I will provide more updates in the coming days as we work together to make America great again for everyone, and I mean everyone.
That was U.S. President-elect Donald Trump. Let's take you to the markets now. In Europe, stocks started higher following record highs on Wall Street and expectations that OPEC members will reach an agreement over an output cut. The WTV financial correspondent Ulrich Bath joins us from the Frankfurt Stock Exchange. Many thanks, Ulrich. Now let's begin with U.S. President-elect Donald Trump from that video saying that he will withdraw from the Trans-Pacific Partnership trade deal on his first day in office. Also in Europe, UK Prime Minister Theresa May is chairing a cabinet meeting to address divisions surrounding Brexit. How are these weighing on the